look out. Gold goes to 7, silver goes to 200, Bitcoin goes to 180. I mean, that's kind of what I see.
What are you buying right now? I'm pleased to welcome back to the show Lawrence Lepard, managing partner of Equity Management Associates. We're going to talk about the global economy. We're going to talk about Bitcoin, gold, what's next for markets, how do we survive, basically this correction. Is it going to continue? Do we get back in? Do we stay out? Lawrence has been right before, and I'm going to explain exactly why. Lawrence, good to see you again.
Really nice to see you, Dave. I always enjoy talking to you.
I've enjoyed talking to you as well. My audience has enjoyed talking to you. On my screen now is an interview that you and I did back in 2024. Now, you've been on the show a couple times since 2024, but I want to bring up this specific video because this turned out to be a pretty much dead-on call. You call for $150,000 Bitcoin and 5K gold.
And my forecast is much higher. I mean, I think we're going to 5,000 easily and then maybe 10 or 15. I mean, to be honest with you, I'll give you the spread. I mean, to my way of seeing end of calendar 2024, we could be at 100, we could be at 300. I have no idea. I doubt we're below 100. I highly doubt that. That's, from 60, that's a 40% move or a little higher. That should be pretty easy.
Bitcoin didn't quite reach 150.
I missed the Bitcoin call, yeah.
Yeah,
but
by about
when we were doing that in
25K or so.
Bitcoin was 60 or something, wasn't it, as I recall?
Well, I'll find out exactly when that was. So in 04, gold was, so this was 2024, April 2024. Gold was still at just over 2,000. So you basically call for gold to double. Bitcoin at the time was, around 660K, I think. Bitcoin, December, March, April, there we go. Yeah. 49K, 50K.
I missed the Bitcoin call. Yeah, I missed the Bitcoin call. I thought we'd go to 150. I was wrong. We went to 125. But
let's revisit this. Why did you think Bitcoin was going to triple at the time and gold double, which turned out to be pretty much spot on, by the way, off by a little bit. Timing we can never get perfectly, but the direction was right and the level was right before they retraced.
Yeah, so I think it was just the monetary debasement trade was just becoming more and more obvious. And as I recall, we actually did that right before I released my book, which was in February of 25. And since we did that in the fall of 24. And what I was kind of seeing, just reading all the economic tea leaves, was that they just had to keep printing money and the deficit had to continue growing. And since then, that's really kind of all we've seen. I mean, and what really turbocharged the move in both Bitcoin and gold, last year was when Doge failed. I think there were a lot of people when Trump came in the beginning of last year that, okay, they're gonna balance the budget, get responsible, etc. And a couple months of that, and Elon said, "Hey, I'm out of here. This isn't going to work." And everyone kind of realized, gosh, they're just going to continue spending money, running deficits, and printing the money. And that's what I think that's the primary reason why gold, woke up and took off like a scalded dog, and Bitcoin kind of did too.
Yeah. So, a lot of people gave up on Bitcoin recently. Have you?
Yeah. Well, they're giving up on it now. I mean, this is the way of the world. It's a really hard asset, David. I'm pretty sure we're right about it. I'm never 100% sure of anything in life, but I'm pretty sure we're right about it. But it's had a lot of drawdowns over time: 90%, 80%, 70%, 60%. This one's a little over 50% now. I will make a point that they're getting slightly smaller each one, but this is the nature of it all. And I remember when the last drawdown was 15,000, and it's at 60 now, and 60 was kind of the old high before it went on the run up to 125. So I think that when this one ends, and we'll talk about that in a minute, when this one ends, I feel like we're going to 150, 180, 200 something, on the next run up. That's always out.
I got your forecast in 2024 and 2025 in bull markets when the price was on its way up. Now that the price has been on its way down, what is your updated forecast now for both Bitcoin and gold? Let's do Bitcoin first and then
sure.
In that order.
Which do you want to do first?
Let's do Bitcoin first and then gold.
Bitcoin first. So I feel like we're carving a bottom here in Bitcoin. A lot of the good analysts that I follow and the economic or the models that I follow, there's one in particular that's very useful called the power law model. Suggests that we're close to the bottom, if not at the bottom. So, whether we end here at 59 or 58, or we wick down to 54, I don't think we're going to see a number that starts with 40. I mean, I feel like the bottom will be here. We may, for all I know, we've hit it, or I think we hit 58 last week. But maybe we go to 54. I don't know. We're from a time point of view, it feels to me like this kind of wraps up in the next 3 or 4 months. I mean, we're about 9 months into this. Most of these Bitcoin bear markets seem to last about 12 months. So, if you take 3 months from now, I mean, what did that be? September, maybe, it's over and we start going up again. But it could be shorter. I don't know. Gold, kind of the same story. I mean, I don't know. Could we, we're in the low fours. I mean, could we go down to 3,800, 3,900? Yeah, sure. I mean, it's entirely possible, but I think that after we do, we'll go back and we'll challenge that. I think the high was about 5,400. Maybe it touched 55 briefly, but I mean, I feel like, next year we'll be at 6,000, maybe 7, by next year, I mean, calendar next year. So, and silver, same story, even more volatile, right? Silver hit 120 and lost half its value. It's down to 60 now, kind of like Bitcoin. And, I feel like silver, I'm with Michael Oliver. I mean, I think silver's going to 150 north of 200. But again, when you're in these drawdowns, it's hard to know how long they last. And sometimes they last longer than you think. And a lot of people are getting discouraged. A lot of people are kind of throwing stones at each other. But I think it's encouraging. The mainstream press has had several articles that have come out and said, "Oh, the debasement trade is dead." And I looked at it and I chuckled. And I thought, "Oh, that's a good contrary indicator because, okay, the debasement trade is dead. Well, have they balanced the budget? No. Are they spending less money? No. It looks like the war or the skirmish, whatever you want to call it, in the Middle East added about $80 billion to the budget this year. So we're going to be solidly over 2 trillion this year in budget deficits. So, they can't stop printing money. And until they do, the debasement trade lives, in my opinion.
What is the debasement trade? What was it in 2024? What is it now?
Yeah. So the debasement trade is just the thesis that, the government, because they are running a large deficit, they have to basically more or less monetize it. And to keep the bond market calm, they have to print money. I mean, this is at a big picture level. It's more sophisticated than that. And, the amount they're printing is varying and the ways they do it are varying. But as you'll recall, before Jerome Powell left his position last December, he pivoted and they started printing money again. It looked like QE. They started growing the Fed balance sheet, which is adding reserves into the banking system, which then gets, a multiplier effect and grows M2. And they renamed it, as they always do. The job of the Fed, I mean, I say this over and over again, the job of the Fed is to create inflation and lie about it, right?
Yeah.
I mean, it's really simple. They got to create enough inflation to keep the system running because they don't want the system to collapse. And in an ever-growing system with a lot of credit, you got to make more money or else you can't pay back the credit and it would collapse. But in turn, everyone hates inflation, so they have to lie about the inflation. And, we can talk about the new guy, Warsh, and how he's going to accomplish that. He's kind of come with a new flavor, a new formula, which is kind of what they always do. Whenever one thing's not working, they'll try something else. So
one thing I've learned from talking to countless investors over the years is that people spend a lot of time searching for certainty, the perfect signal, the perfect entry point, the perfect moment to act. But markets rarely work that way. In fact, many of the smartest investors I've interviewed weren't successful because they waited for certainty or the perfect entry point. They were successful because they acted when they had conviction. And that's especially true when it comes to something like gold. Many people have followed the gold story for years. They understand the macroeconomic backdrop. They see why central banks continue to accumulate gold, and they understand the concerns surrounding government debt, deficits, and currency debasement. But understanding an investment thesis and actually positioning for it are two very different things. Today, more investors are deciding to take a closer look. Some are purchasing gold directly. Others are moving a portion of an IRA or a 401k into a gold IRA. That's why today I partner with Augusta Precious Metals. What I appreciate about Augusta is their commitment to education. They explain how their process works, answer your questions, and help you evaluate whether or not precious metals make sense for your particular set of goals and situations. No pressure, no hard sell, just information so you can make an informed decision. So if you'd like to learn more, visit lintrustsgold.com, link down below in the description, or scan the QR code here, or text LIN, L-I-N, to 35052 to receive Augusta's free information guide. How do you explain the fact that the inflation numbers have started picking up as Bitcoin and gold started falling?
Well, I think that actually is a good indicator of why Bitcoin and gold are falling. So, and I think it also represents a misunderstanding on the part of a lot of market participants of what's going on. I mean, there is no doubt that inflation has been running hot at both a PCE level and at a PPI level. And some of that was tariff related earlier. Now it's probably some of it's a piece of it's war related, in the sense that the price of oil took a big, boost when we decided to go to war. And so what you see in the marketplace is that, a large percentage of the market now thinks that the Fed's going to raise rates to tame inflation. I mean, in any kind of historical setting with inflation heating up again, I mean, they never achieved their 2% objective, right? I mean, it went to 9 on COVID. It came back down into the threes, mid to high threes. They haven't even gotten into the twos yet. They want to get it to 2.0. And so, I think what the market is thinking is, well, gosh, these inflation numbers are hot. We're going to have to raise interest rates. And if they raise interest rates, that means, bonds are more attractive and real interest rates are higher. And hey, we don't need monetary debasement. The dollar is as good as gold, I mean, and by the way, the dollar is rallying versus foreign currencies. So, that's kind of what's going on. Now, I think that narrative is wrong. I mean, not short term. I mean, it's possible he raises rates. I think it's unlikely. And I think we've seen some clues of that. Besant and others have said things. And even Warsh, before he became Fed chair, said, we could live with maybe, we don't want to look backwards in terms of inflation numbers. We want to look forward. And with all this AI productivity that's coming on, we think we're going to have lower inflation. Oh, and by the way, we might be measuring it incorrectly. We should use this new thing called the Dallas Trim PCI, where they take out the outliers. And it turns out that number is closer to 2.3% instead of the 3 point some odd percent that, the CPE is showing. So I think they're going to have to cut rates, but the market doesn't think that yet. And so with the market saying, oh, they're going to raise rates, that's going to hurt gold and silver, the money's going to get stronger, you don't need to protect yourself from debasement.
So how are they going to cut rates into a 4.2% CPI?
They have a task force for that, David.
They do, yes. Yeah.
One of the things I mean, so Warsh comes in and he does a couple of really things I thought were pretty hilarious. I mean, first of all, he says, we're not going to give you any guidance. We're just going to leave you in the dark. Kind of like what Greenspan used to do. He just did it with gobbledygook language. That's kind of a changing of the rules, which is they always do. When things aren't working out for them, they just change the rules. And then the second thing he said is we've got these task force. They're going to study all these things, including the balance sheet, inflation measures, communications, et cetera. And so, he's appointed a committee to study inflation. I guess, I'm guessing that what that committee is going to conclude is, these numbers are high, but the numbers aren't right. It's actually running lower than these numbers. They're going to lie about it. And that's going to allow them to cut rates. And
what is the
Go ahead.
What is the incentive? What is the incentive to lower interest rates? Lie about inflation and lower interest rates. What do they gain from this?
Yeah, so it ties in with the Trump administration. It ties in with Besant. It ties in with they're all kind of supply siders where, they think we need to reshore our industry. We need to create supply, and that you don't actually bring prices down by restricting supply. If you raise interest rates, you dampen capital investment. By dampening capital investment, that dampens supply, and less supply means in all of the things, inflation goes up. They're making the Alan Greenspan 1996 argument, which is if we cut interest rates, that will lead to more investment. More investment will lead to more supply. More supply will then bring inflation down, even though you can't see it today. So I envision a world where they can say something along the lines of, hey, yeah, we know the numbers are hot, but that's backward looking. Forward looking, we're going to create supply by bringing rates down and stimulating investment in new technologies, AI, productivity, the kinds of things that are going to make inflation come down. That's the spin. I mean, and they, what they really want to do, I mean, and they kind of have to do this, David, because, they've got a problem, right? There's too much debt to GDP. We've got 124% debt to GDP in the United States. And that's not counting the off-balance sheet stuff. And so as a result of that, we kind of look like we did coming out of World War II, where and the way we got out of that World War II is, one, we had yield curve control, but a different subject. But more importantly, we grew, interstate highways, GIs building houses, everyone got a car, radio, TV, all that stuff. So coming out of World War II, we grew our way out of the debt burden. And I think that's kind of what the Trump administration hopes to do. And, to be honest, to be fair, they can kind of do that. They probably can. I mean, unemployment will actually be low. But I think it's going to be very hard to have that growth without having inflation. If you go back and you study that World War II period, there was huge inflation during the war and in the 50s. And it wasn't until the early 60s that they really got it under control. So, it's I think we live in an inflationary world, and I think more and more people are coming to understand that, and that as they do, they're going to think, hey, maybe I should have some of this debasement trade. And the funny thing is, gold and silver went up a lot, Bitcoin went up a lot. It's still not front page news. I mean, it's still, if you go and, Ronnie Stofferly has great charts on this in all his incrementum reports. Gold and silver holdings by the average investor are still extremely low. Gold and silver mining holdings are extremely low. Even Bitcoin holdings are extremely low. I mean, the average investor right now is chasing SpaceX. I mean, I had all my friends and, a lot of people I know calling me and say, how do you get SpaceX? How do you get SpaceX? Right? Because, it's the new bright, shiny object, and it's going to change the world. And AI is important. It is going to change the world. But this sounds, I was around. I invested a fund. I was managing a fund during 2000 when we had the internet bubble. And it reminds me so much of that because you knew the internet was important. You knew it was going to change the world, and it did. What you didn't know is how. And so that people were throwing money at things like pets.com, and, Amazon wasn't even, on anybody's radar screen. Of course, Amazon changed the world, but pets.com went bankrupt. So, and I feel like that same kind of pattern is going to play out in AI. AI will change the world, but we're not quite sure how yet. And throwing money at some of these new ideas isn't necessarily a good thing to do, in my opinion.
Have you rotated into AI stocks and tech stocks at all in the last 2 years?
I really haven't, no. And I missed all the technology stuff. I mean, I'm kind of a one-trick pony. I think that the debasement trade is the trade of our decade. That we live, we hit peak deflation in 2020, and we haven't until I see something that suggests that they are going to solve, the overspending problem, and that they're going to solve unsound money, and that they're going to, behave in a responsible fashion. I'm going to ride the debasement and the inflation trade because I think it's got years to run, maybe decades to run. Now, don't get me wrong, though. I'm not a perma, in that direction. I mean, at some point in time, things will change. They may cut the deficit. They may reset the currency. There are a lot of things that could happen that would change this, and it wouldn't be the best place to be. But for now, I've been saying in other podcasts I've been doing, I really do feel like we're in the third or fourth inning of a 9-inning baseball game. And until I see change on the spending side and the budget side, I don't think there's any reason to not be where we are, which is betting on debasement.
What is the end game of this debasement?
Well, boy, don't I wish I knew. I mean, it could end so many different ways. I mean, I think look, they could try to make the money sound, balance the budget, cut back. They could do a 1929. I mean, just liquidate everything. But boy, that would be incredibly painful. I mean, the stock market would come down. I mean, cash would be king. The price of everything would fall. I mean, it would be just a deflationary holocaust. But that's one of the possibilities. I don't think that's a very likely possibility because the Fed is deathly afraid of inflation. Bernanke taught us that. And I think when push comes to shove and the markets might not function, they're going to print the money to keep things going. But that's one alternative. I mean, let's call that a 3% shot or a 5% shot. I think the other alternatives are all just kind of at what rate are you going to debase and how bad is it going to get? And then when are you going to eventually do something Volcker-like, which I don't think you can really do what he did, which is put interest rates up at 20% because everyone would go bankrupt. But I think what you could do is you could say, we're going to reset this thing. We're going to go to a gold-backed treasury bond like Judy Shelton has proposed, or we're going to in some way make these fiat currencies be tied to something that can't be printed. And if, gold, silver, Bitcoin are kind of natural things, but you could put oil in there, other things. I mean, you could do a commodity basket. I mean, even evil John Maynard Keynes proposed something called the Bancor, which was a kind of an artificial but limited supply of a certain form of credit. And, so there have to be kind of a monetary reset in a way. And it's interesting because Scott Bessent, who's now our Treasury Secretary, before he got that job, said something along the lines of, look, he even admitted, and he's a gold bug, by the way, he said, this monetary system, this credit system is kind of a problem. And it seems to me like we're going to at some point have to deal with it. And it might involve some kind of a reset akin to what we did at the Plaza Accord or in Bretton Woods. And if and when that occurs, I want to be at the table. So you've got the Treasury Secretary of the United States kind of aware of the problem. And, they've got 2.5 more years in office. And my sense might be that they're cooking up some plan to do some kind of a reset. I don't know. I mean, if they're not, they should be cooking up that plan because
reset of what?
the currency against a sound, against a sound
Okay.
measure. Like say we're gonna reset, the dollar's gonna be worth $20,000 an ounce of gold, and we'll buy or sell gold at that price. Bring your gold,
Hmm.
we'll give you 20,000. Give us 20,000, we'll give you an ounce of gold, and we're back on a gold standard. I mean, I think that's actually a possible outcome at some point in the future. And I don't know if I'm not saying I know that 20,000 is the right number. It's one of the numbers that's
Sure.
kicked around. Arguably it might need to be higher. I mean, if that's the case, everybody might, bring in their dollars and say, "Give me the gold," because they know it
How is
should be
the
40.
how is a debasement trade similar or different from the sell America trade that's also been trading, basically getting away from American equities into foreign markets as well as getting into cash and gold?
Yeah, that's a great question. I think they're a little bit of the same idea. I mean, the let me just think it through. I mean, you and I both know, and you can, if you do if you Google the charts on, where's the U.S. stock market using the Buffett indicator. I mean, the U.S. stock market by any historical measure is crazy, crazy at the high end of the valuation range. Now, what people will say is, yeah, it's different this time, and we live in a new world, and there's a lot of monetary stimulus, and that's just the new normal. We're gonna trade up there for a long time, and so far they've been right. I can't argue with them. I mean, I've thought this market's been overvalued for a long, long time. But I think there's a chance that at some point in time things start to break, and if the money isn't as free flowing, if they don't print the money as necessary, well then they're going to have one heck of a problem on their hands. I mean, you asked earlier though, how could this resolve itself? I mean, one of the ways I could see it resolving itself without some kind of a crisis and a big print, which is kind of the title of my book, would
Hmm.
be that we could just end up having high inflation for a bunch of years. I mean, the economy is pretty good, people are working, but inflation just continues to be high, just relentlessly high. And I think that if that's the case, eventually what's going to happen, in my opinion, is in America, and probably in other countries too, Canada, but certainly in America, you're going to find, pro sound money candidates starting to get political traction. I mean, a guy like a Thomas Massey or a Warren Davidson are going to say, hey, this inflation is horrible, and we know why it's happening. It's happening because of the Federal Reserve and they're printing of money. We need to transition to a sound money standard, and here's my plan. And,
Yeah.
they're going to get elected because everyone's suffering from inflation. So I'm not saying that's a super high probability outcome, but it's one of the paths that we could go down.
AI is expected to create basically unparalleled levels of wealth inequality, with a few people basically creating billion-dollar companies with one or two people at the helm of the company and
Yeah.
nobody else. That's a projection, and it's a great equalizer, but also unequalizer at the same time, in the sense that everybody now has the tools to make themselves more wealthy, and at the same time, we're going to get a few pockets of people creating so much more wealth than they did before. Case in point, Elon Musk with the new SpaceX IPO. I
Yeah.
wonder how that's going to change investing forever.
Yeah. Well, it's certainly, investing is always evolving, and the old rules are good guidelines, but they're not the new rules. The rules are always changing. I mean, AI will be deflationary. AI will, some people say, I mean, I've heard the argument that, hey, Larry, it's all good. Don't worry about it. AI is going to bail us out. The productivity enhancements are going to be so substantial that we're not going to have a problem. But I push back on that. I mean, I hope that's true. I mean, I hope it does enhance our productivity a lot, but I push back on that a little bit because all the people who lose their jobs, if they're replaced by an AI agent, so to speak, are going to find, they still have, car loans and house mortgages, and, they need to find a new line of work. And of course they will. I mean, this is like, all the weavers in medieval England when the loom was invented, they transitioned. But, it's AI is an interesting development, and it's a net positive development, and humankind will make its way through it. But it adds to the deflationary tone of all these technical developments, and yet we live in a monetary system that was really created kind of 1913 and maybe 1944 with Bretton Woods, that requires continually expanding credit to function. And so when you've got kind of a deflationary technology thing contrasted with an economy that needs growing credit, something's got to give. you know.
Yeah.
So that's the underlying problem, and that's why, I think it's so hard to know the variables because you got so many moving pieces. You don't know what policymakers are going to do, but we can look at the history of it all, and we do know that when push comes to shove, rather than letting the economy go to tank or the market tank even, the Fed and their ilk, they come with the money fire hoses. You know what I mean? They print money and it prevents things from tanking. I mean, '08 was an example. It prevented things from tanking. COVID was another example. Things would have tanked if they hadn't printed all that money. But I think there's a chance that we've got another one of those kinds of events coming. I mean, and I don't know, maybe it's if AI, the bloom is off the rose there, maybe it's some of the private credit stuff in the United States. I mean, who knows what the catalyst is? But I think that, I do think that I know that from the things I look at, I see a lot of leverage in a lot of places. And that always implies that you got to grow the money supply, or that leverage isn't sustainable. So, that print, my big print, I mean, I may be wrong on the timing. I was rushing to get my book out in early 25 because I thought it was happening imminently.
Yeah.
Turns out I was completely wrong. Here we are, a year and change later, and it hasn't happened yet. And for all I know, it could take a few more years. I mean, I have to live with the fact that I could be wrong. But I think mathematically and directionally, I'm correct that they've got to print the money, and the time is coming.
Maybe they're doing it in different ways and other forms as we speak. Right now, the
Yeah.
debt is growing in basically all major G7 countries.
Yeah.
Everyone's spending more on basically everything, especially
Yeah.
defense, which seems to be the trend around the world,
Yeah.
global rearmament. And so debt to GDP in the U.S. is expected to reach 120% by 2036, according to the CBO. Deficits are widening in Japan, and so in Europe as well. So the debasement trade is happening maybe through the form of more government spending fiscally, not monetarily. What do you think?
I think that's right. I think that's absolutely right. I mean, governments do continue to spend enormously, and I mean, yeah. But the point I guess I would make is that when you take on a debt, it represents something that you have to service on a go forward basis. I mean, you can roll the principal over as we usually do, but you have to pay interest on it, and that interest is real. And if it doesn't get paid, it defaults. And right now, the U.S. has a $1.3 trillion a year interest bill, and only going up. And the U.S. debt is only going up. And so, that government spending is what leads to the need to create the money to keep the whole structure alive. That's the underlying problem. And by the way, a lot of money needs to be created. There's not enough liquidity. I mean, it's interesting. I don't know if you've looked at the capex numbers for this whole AI space, but they're talking about this year $600 billion being spent on AI infrastructure build out. Next year, they're talking about $1 trillion. And I saw an estimate this morning that said by the next 5 years, it was like $8 trillion. And so, we're really spending a boatload of money on AI, and boy, it better give us some productivity because we're spending a lot of capital on it. And
Yeah.
so, and that capital comes from somewhere else, and that's part of what creates tight liquidity. I mean, to me, it's interesting that I think some of what has taken the air out of Bitcoin and gold and silver is, people are thinking, well, okay, those worked last year. That's great, but that's over. Let's move over into this AI trade. Give me some SpaceX, give me some Intel, give me some NVIDIA. Do you know what I mean? And okay, and by the way, if you did that 6 months ago, particularly with Intel, you'd be rewarded, but it would have been rewarded. But I'm not sure that's going to continue. And I think at the end of the day, if these cracks start to surface, the Fed is gonna end up being dovish, and I already think they are dovish. I think the market's got it wrong. I think the market thinks he's going to tighten, and he's not. And in fact, I think he will loosen. I'm not sure when. There's a meeting in July. There's a meeting in September. I mean, there's an election in November. I mean, there were some interesting tells, David. He said some hawkish things at his first press conference. He let the dot plot stand, and it was showing tightening, and everybody viewed him as being hawkish. And somebody asked Trump over in France, and they said, "Hey, how do you feel about Kevin's first press conference?" He said, "He's my guy. It's all good." And to me, that kind of told me, the fix is in. I mean, he sets up the task force, and the task force is a really interesting, gambit, right? I mean, creates a task force. The task force is going to, tells them, come back to me and tell me that inflation is lower than reported. And they're going to come back and tell him that. And then he can blame them and say, hey, look, I got this expert task force and they're telling me inflation is lower than reported. We actually need to cut rates.
Yeah.
You guys are all thinking we need to raise rates, but no, we need to cut rates. When that happens, our stuff's going to go ballistic. I mean, our stuff right now is acting like they're going to cut rates and make real rates go higher and all that good stuff. But when the market wakes up, I mean, it's like a 90% chance they're going to. The prediction market is showing like a 90% chance the Fed increases interest rates this year, in the remaining 6 months of this year. And I'm telling you, I'm here to say I don't believe that's going to happen. In fact, I think it's probably the same equivalent chance that between now and the year end they're going to actually cut rates. And so if the market believes that first thing, and then I'm right about that second thing, when that shift takes place, look out. Gold goes to 7, silver goes to 200, Bitcoin goes to 180. I mean, that's kind of what I see. But hey, to be fair, I could be dead ass wrong. I mean, maybe they will raise rates. Maybe I'm wrong. But I do know that behind it all, mathematically, if they raise rates, fine. I don't think it'll last that long because something will break. And if something breaks, then we're back to where we were in 2008 and 2020, which is, turn on the printer. So the path. It's obviously the path is unknown to all of us. But the
maybe
trend,
they tighten. Yeah, maybe they tighten, then break the economy, then we get loosening.
Absolutely, that's certainly one of the scenarios. And there are people saying that he was brought in to do that. He was brought in to tighten it, break it, have declare a crisis, and then print like crazy. And that may be true.
Well, he was brought in to lower the rate, and the economy just headed in a different direction than the original plan.
Yeah, maybe. I mean, who knows? Who knows? I mean, the clues I've seen from. If you read. I mean, Besant said something recently. Besant said something along these lines. He said, we could have a stronger dollar with lower interest rates. And I thought to myself, why would he say that unless he was actually thinking that there is a plan to have lower interest rates? I mean, just making that comment to me is like, the guy's like a bad poker player. It's like, that's a big tell from what I can see. So, I don't know. We'll see. We'll just have to see,
What are you buying right now? Anything?
Oh yeah, I know exactly what I'm buying. So I'm buying MicroStrategy. I just bought some this morning. It's gotten beaten up terribly, and everyone thinks Sailor's going to get liquidated, which is ridiculous. Anyone who does just do your basic homework, you see that's not true. I've been buying silver miners. I mean, the silver miners. So as a lot of people are precious metals investors. Silver was stuck below 50 for 30 years.
As we're talking about strategy, I'm going to leave this on the screen.
Oh, yeah.
Right?
Yeah.
This strategies, Michael Saylor's strategy launches a Bitcoin monetization program that allows the company to sell BTC to fund operations. Rand Neuner had a good tweet about this, just summarizing the main points here. Framework includes 5 components: of board-approved USD reserve policy, revised stretch dividend policy, dividend digital credit securities repurchase program, Class A common share repurchase program, and BTC monetization program. Number 5 has people talking potentially a permanent Bitcoin selling strategy. Yet to be determined. But they already sold Bitcoin a couple of weeks ago.
They sold like 32 of them, which is a joke. I mean, he's got 800,000 plus of them.
That's right.
So what they did here is really, really smart. And what he basically said is, look, we've got a big stack now. And when we were growing and that was an important thing for us to do, was to get to this size. But now that we're at this size, we're going to be like a bank. We're going to buy what's, cheap, and we're going to sell what's dear. And so, if you guys want to, I mean, he's basically, what he did was he put down a challenge to all the hedge funds. He said, you want to go ahead and short, our stock? Great. Because if we sell below our fair value, we're going to buy it back. And, and everyone thinks that, if he sells some Bitcoin, it's going to affect the total market. Bullshit. I mean, it's 4% of the total market. And what he'd have to sell to do some of the things he's talking about, it's like, less than 1/10 or 0.2%. So, he's really maturing the strategy and no pun intended that he's got. And he's put himself in a very strong position where he can react to whatever the market conditions are. and he's pointed out, and I believe this to be true, that he will react intelligently. So I think strategy is a screaming buy here. I bought some more personally this morning. So, but anyway, the other thing I'm buying a lot of that's equally screaming and probably will move first is the silver miners. I mean, we were talking about, so silver, the peak on silver, as you know, was $50 for 40 years, right? Hunt's got it there, and 2011 got it there, and we broke out of it last year, and we squirted up to 120, went way ahead of itself, and now we're correcting back into the 60s. But this is, you don't have a 40-year top that gets broken and then you settle down 50% above that. It's just not the way these markets work. I mean, so silver, in my opinion, and the stocks, with this retrace from 120 and the silver price to 60, stocks got hit hard. I mean, I got a lot of good silver stocks down 50%. And they weren't over expensive. They weren't overly priced, by the way, at the peak. I mean, the stocks have always been they've traded as if people don't believe the prices will stay where they are. And so there's some real bargains in the silver miners right now. And we've been buying those too aggressively. So, because I feel like on the next run up, they'll all make new highs. So, but I mean, again, one thing I think is very important to emphasize, David, when you're in this debasement trade, you got to have a multi-year time frame. And you can look really wrong for a month or two, or, when somebody's going to listen to this video and they're going to get on Twitter 2 months from now and silver's going to be at 50 and they say the guy's an idiot and he's wrong. But I challenge, I think a year from now, the odds of silver being here are extremely low.
By the way, I this is completely off topic, but I think it ties into what we're talking about. I polled my audience, how many of you bought the SpaceX IPO right after it happened? Polled my community, as they're pretty active and engaged. 90% voted no.
You got a smart community, David.
5.7 thousand votes, so that's almost 6,000 people voted.
Yeah. Well,
and 90% voted no. David Lim followers and level-headed investors. This is one of the comments. The top comment, when everything feels like a scam, it is a scam. We're not dumb enough to be exit liquidity for big money. I
love that. That's a great comment. That's absolutely correct. I mean, there's so many VCs. I mean, I know of people who bought private rounds, last year. I mean, they were doing private rounds, and they're all under lockups, right? And I was around in the 2000 .com bubble days, and boy, there was nothing that killed a stock more than when all the insiders who were locked up, suddenly the lockup date expired and they could sell, and they're thinking, good God, I got 10x my money here, or some big number, and they're like, get me out now. I don't care if it's down 10, 20%. So yeah, look, there's a piece of the SpaceX business that's a really good business. I mean, the Starlink business is a beautiful business, and it will last for years, and it will grow, because the notion of having everybody on the planet have a fast internet connection, that's a really great idea. And there's a price at which I'd want to own SpaceX, but it's not close to today's price. Today's price is way too high. So.
China is buying more gold, apparently. Gold imports in
May.
May.
Did you see that?
Yeah, I saw this news. Let me just pull this up, and I just want
to
end on
gold. A lot more, right? Yeah.
Surged to the most in 2 years. Imports were around 163 tons last month, the highest since March 2024. So as other people are selling, as the price is going down, China's importing more. I wonder if they're a good leading indicator or contrarian indicator here.
I think they're a good leading indicator. I mean, I think that, look, they're very smart. They've got the world's most productive economy in terms of making stuff. We've got it in terms of financial stuff. But, they're smart. And, I think they're making a bet that gold is going to play a very important role in the future monetary system. I mean, one of the things we see going on here, just at a big picture level, is just kind of the U.S. has been in the lead in terms of economically, financially, in many, many respects for decades and decades. And 2000, China gets into the WTO and kind of starts building a manufacturing base. And, they're a hell of a competitor. In fact, they are in the lead probably manufacturing wise today. And, so, we've got to counter that. And, and they know they're smart about fiat money. I mean, they know that they've been debased in terms of the dollar. And this is why they set up the Shanghai Gold Exchange. And this is why they're settling in, their own currency and then giving people a chance to buy gold, because, a lot of parts of the world are coming to realize that, the dollar is just, it may be the leading currency, but it's not an economically sound currency from a holding value point of view.
Okay, so Lawrence, did you sell any gold, by the way, at $5,000?
No, I didn't. Well, so I've got my personal gold that I'll always hold. I got a personal. So I tell you what, I did sell. So last year we had a bunch of silver stocks that we bought. I mean, I'll give you one name, Avino, which I love. We bought that thing at like less than $1. I went to 12 last year. Okay, so we had a 12 bagger in it briefly, and as much as I love it, I still think it's going to be a lot more valuable in 5 years. We lightened up a lot, and but here's the thing: it's back to 5 or 6 now. I think I'll check. I think it checked today. Yeah, it's back to 6 now, and so I've been personally and in the fund we've actually been buying back some of what we sold. So in general, we are buy and hold people with a multi-year time frame. But if something gets ahead of itself, in our opinion, we will sell into it a little bit to create some liquidity and try to find something else that's cheap. And the silver stocks, a few of them got ahead of themselves.
Once it hits their target, 5,000, 6,000, whatever the case may be, does that prompt you to load up, lighten up a little bit on
a little bit? I mean, if we see another, look, I think that right now the silver and gold stocks from where we are today should easily double within the next 18 months. I feel that very confidently. And, right now they're fairly underpriced. I mean, at that point in time, depending on what happens to the metals, they'll start to be getting into the slightly, fair values, maybe even slightly overpriced. Now, in a real bull market, they can get to be very overpriced. I mean, and by price, let me tell you what I use as a measure. I often just look at the market cap compared to their mine profit or their EBITDA. Just how much cash does this thing flow off? And, back a year ago, we were buying things at 3 times EBITDA. It was ridiculous, and now we're still, buying things at 4 and 5 times. But in a real bull market, sometimes things in 2011, there was stuff trading at 20 times EBITDA. It didn't make any sense, but it happened. And, so as things get more expensive, we will lighten up. But we'll also be looking at the macro conditions and kind of deciding, all right, do we see the budget getting balanced? Do we see fiscal responsibility? Is there maybe some talk of, returning to a more of a sound money standard? I mean, if those things start to come true, then we would lighten up some, and or do values emerge in other places of the world, things that look cheap or good to put our money. I mean, one of the problems you sell is like kind of, okay, you're selling, but what for? What are you going to get? Oh,
yeah.
You're going to give me dollars? Okay, fine. That's nice. But what am I going to do with them? Because I know they're getting diluted. So it's a little tricky, but we'll just have to play it, by ear as we go along. But I feel very confident that we've got another good run coming in gold and silver mining stocks, and that, we should be up 100% within the next kind of 2 years. I'd give myself some time, 2-year time frame. I think it'd happen sooner, but certainly within 2 years. And at that point in time, we'll kind of step back and assess, where are we? What's going on? What's government doing? Do we want to, these are more fairly priced? Do we want to sell? Whatever.
Okay. Well, thank you so much, Lawrence. You've been right before. You've had a good track record, and hopefully you'll be right again. We'll follow you and learn more from you. So where can we do that, Lawrence? Where can we follow you?
A couple things. One, I wrote a book on this topic. If people are interested, I'm always selling the book. I don't make much money, but I think it's a helpful book. It's called The Big Print. It's on Amazon. Two, I'm on Twitter, just under my name, Lawrence Lepard. I make a lot of noise. Generally, I'm just railing against the investment banks. I think fiat money is the scourge of our age, and we need to return to a sound money standard. Sound money would restore, would make the world a much better place. If we go back to sound money, the world would be a better place. I'll leave it at that. And then I have a website called Equity Management Associates. It's www.ema2.com. We write a quarterly letter. My partner, David Foley, and I write a quarterly letter. It's 20 pages long. It's kind of a macro overview, and it's free. So you can just go there, and every quarter we say, okay, this is what happened. This is what we think is going to happen. This is how we see it. This is what we're buying. This is what we're selling. And then it's got my fund results and all that kind of stuff in there. So you can see all that. And that's, if you go to the website and you scroll down, you can actually put your email address in there, and you'll get it every quarter, and we'll never spam you. That's the only thing you'll get. And then, it's got MailChimp, so if you don't want to get any more, you just unsubscribe. So that's kind of what we got. And I do a fair number of interviews. So if you follow my Twitter feed, you can always kind of find stuff there. And some are more silver oriented, some are Bitcoin oriented. I mean, they're all different topics. With you, it's probably a little more gold and silver, but Bitcoin's in there and it's a little balanced. So.
Okay, good. Thank you very much, Lawrence.
Well, thank you, David. I always enjoyed talking to you. I think I'll probably see you at a couple of these upcoming conferences. I know there was
That's
one
right.
invited to that you're going to be at. So.
Yeah, that's right. Okay, I'll see you soon for sure in
See you
person.
soon.
And
Okay.
and for now, follow Lawrence below. Check out his book.
Great.
Take
Thanks,
care for
David.
now.
Take care.